Hello friends, welcome to my channel and thanks for watching this video. So welcome to another session of USA Weekly Market Report, and we have seen a volatile week that has just passed by, and the Friday close was not good. I mean, Dow Jones down by 300 points, S&P 78, and Nasdaq have fallen 2.24%, nearly 427 points. So obviously we have seen a massive spike in the VIX, and the same thing applies on the equity market, where most of the indices, or actually all of the indices, are down and out. Now, is this a near term correction or is this volatility or something else? That's something which we are going to discuss through charts. So let's start analyzing the chart without any further ado. Now, this is the price chart of Dow Jones, as one can clearly see, and I've said the same thing in my previous video, that volatility is indeed creeping in as far as the market is concerned. But as of now, it is down but not out yet. That's what I can say over here. And if you are looking at, so let's start with the price chart of Dow Jones over here. So what we have seen past week is a breakout, or was a breakout actually, and here we are. So it was your resistance zone, and Dow Jones breaks out at or above these two lines couple of days back, and if it continue to sustain above 43,268 and 43,353 respectively, then you will see the resumption of an upside once again. So it is down but not out yet. Okay, so that's the first thing. Second thing, if in case, let's say, Dow Jones falls below 43,268 or less, then in that scenario you will see further correction, and next swing may push Dow Jones somewhere in between 42,200 and 42,370. So this is something which will become active. So right now, what is clear is Dow Jones is trading near its support. Okay, now your previous resistance level should work as your support. If it does, then you will again see a move towards 44,000. But if it does not, then the correction will push Dow Jones further towards or in between 42,200 and 370. So it is lingering somewhere in between a specific range. It will all depend upon how Dow Jones will move going forward or in the upcoming week. So let the price decide. Here in this case, let the price decide. Now let's talk about Nasdaq, because it has fallen quite sharply, and that's not at all a good sign even in the near term. Okay, so here we are. Obviously, we have very high volatility in Nasdaq. So, but still, it's like crushing down. So it's not. It will obviously disturb the trend. Right now, it is also hanging. So trading very near to its previous resistance level, which should work as your support. So this particular range, a narrow range, is something in between which Nasdaq Composite is trading. So if you are looking for an upside, then let it surpass and sustain above 18,710, and if it further falls below 18,586, 585 or more, then here also you may see an extension of this near term correction, which may push Nasdaq in between 18,000 and 18,250. So in both the cases, it is quite visible that even though both Nasdaq and Dow Jones is trading near its previous resistance level, which should rather work as a support, but it is somewhere in the middle of the range. So there is a probability of correction even in the upcoming week, one which one must not rule out. Okay, so that's very important. So you may see volatility in the upcoming week, and I mean there is a fair reason for that, because we are in the month of November, in the middle phase of November. So winter holidays has probably started, and obviously market participation will be on the lower side. So that's another reason. Obviously, Santa Claus rally will be an excuse, but we have to see when will it happen, or whether it will happen or not this time, because economic challenges are there. But because the new president is a business friendly person, so obviously US economy is cheering up for that. Anyways, the same thing applies for S&P 500 as well. and it is also trading near its previous resistance, which is now your support, and it will be in between 5859 and 5885 or 5886. So let it surpass and sustain above 5886, and if it falls below 5886, then obviously rather this is something which we are going to use as far as our next support is concerned, and I'm talking about 5781 in this case if things does not work out and S&P 500 falls below 5859. So although we have to check further indications, we will check further indications like dollar index and what it is saying, but you have to wait and watch a bit before you jumped into it if you are on the long side, because there are some more correction which is due even in the near term if you're looking at the very near term pattern. So let it pass through, or let the price decide where it actually wants to move. If it is on the upside, then obviously go higher, or vice versa. Now let's talk about the dollar index. It will give you a sense or a direction, and this is the reason why we have seen volatility in the equity market. So this kind of price behavior in dollar is not going to comfort the equity market, be it the Wall Street or the global market. Okay, you will definitely see volatility. Now the good thing is dollar index hit the resistance zone or very close to the resistance zone. Now whether it is a blessing or I would say a curse, that will depend upon how it will behave. So if dollar index is trading very near to the resistance, which is 107.45 or 107.5, so if this is the resistance zone and you will see downfall in dollar index, or if it continue to trade below 107, then obviously you may see a downside. Okay, and this downside will push dollar index towards the lower end of the range. So that's a blessing in disguise, I would say, for equity market. But what if dollar index surpasses 107.5 and sustains thereafter? In that case, I mean, everyone should be ready for some more volatility, and you will see, sudden volatility comes in the market if the other part of the probability become true. So one thing is it is trading near its resistance. So if there is a breakout beyond 107.5, then this entire section will become active, and that's the big problem over here, because moving towards 110 114 is like is a very bad scenario, I would say, for the global market. I can't say how it's going to impact the US market. Obviously, it will definitely impact the US equity market, but I mean, global market will be in tantrums, that's for sure. Okay, even in the short term, I'm not talking, but if this is the resistance and dollar index started falling down, then obviously it will be a sigh of relief, and you will see equity market will start moving higher once again. So this is a two-way scenario. I mean, this is indeed a dilemma when we are looking at the dollar index and when we are looking at the equity market. So let it pass through. Let First of all, let the dollar index move. If it started falling down, then obviously you will see a price behavior change in price behavior in equity market, and equity market started moving higher, and then you can take your better decision. Now let's also talk about the gold because gold is something which is losing its momentum in the near term. I'm saying in the near term, okay? I'm not talking anything about the big trend. So this is the price chart of gold, and near term correction is going on, and the potential range in between which the gold futures chart is trading looks something like this. Okay, so this is what we have here. So there is some more correction to be seen in gold futures chart, and you will see a move towards or in between 2400 and 2450, where it's going to find its next big support, and from there you will see a move even towards 3000, but it is in a corrective phase, or it is in a corrective zone, no doubt about it. So overall there is indeed a dilemma, and volatility is on the higher side. So let it let's wait for the market to decide where it actually wants to move, and then you should plan yourself or plan your bets accordingly, because we are in the middle of a particular portion, and it's a 50-50 situation, which is not at all a good scenario. I mean, it may happen on the upside or on the downside. So if we get a clear indication, and then you can move into it, or at least wait for the next policy meet. Okay, what they are saying and how the market is reacting will give you a better idea. But this time it looks volatile, no doubt about it. So this is the end of the video. Thanks for watching.